Good morning. My name is Dr. Deepika. Today we'll be discussing about an important concept, that is financial statement in accordance with Indian Company Act. Starting with this, according to in a financial statement is related to companies includes a balance sheet as at the end of the financial year, a profit and loss account, or in case of companies carrying on any activity not for profit, an income and expenditure account for the financial year, cash flow statement for the financial year, and any explanatory notes and annexed to or forming part of or any document referred to it in subclause or to subclause. However, financial statement with respect to one person company, small company and dormant company may not include cash flow statement. Basic meaning of financial year according to S241, financial year in relation to any company or body corporate means a period ending on 31st of March every year where a company has been incorporated or on after first day of the January of the year, the first financial year where the company has incorporated or after first day of January of the year, the first financial year will end up on 31st day of March of the following year. Type of financial statement on the basis of period. Following are the two type of financial statement: annual financial statement and quarterly financial statement. Annual financial statement, these are prepared once in a financial year, one in a single year, and quarterly financial statement, these are prepared by listed company on quarterly basis as per SEBI, Security and Exchange Board of India requirement. Schedule 3rd of the Companies Act 2013. Schedule 3rd of the Companies Act 2013 provides the manner in which every company registered under the Act shall prepare its statement of profit and loss, balance sheet, and notes to the financial statement. There was a need of enhancing the disclosure requirement under the old Schedule 6 to the Companies Act 1956 to harmonize them with the notified accounting standard. Therefore, the Ministry of Corporate Affairs issue a revised form of Schedule 6 by notification number this dated February 28, 2011. The revised Schedule 6 to the Companies Act 1956 was applicable to the company for the financial statement to be prepared for the financial year commencing or after 1st April 2011. As per the new Companies Act 2013, this has been numbered as Schedule 3rd. Next, general instruction for preparation of financial statement, overriding status to other requirement of the Companies Act and to the accounting standard. Schedule 3rd of the Company Act 2013 provide that where compliance with the requirement of the Act, including accounting standard as applicable to the company, require any change in the treatment or disclosure, including addition, amendment, substitution, or deletion in the head, subhead, or any change enters in the financial statement or statement forming part, the same shall be made. The requirement of the Schedule 3rd shall stand modified accordingly. Thus, the Schedule 3rd of the Company Act 2013 gives overriding status to the other requirement of the Company Act 2013 and accounting standard as applicable to the company. In other words, the requirement of the accounting standard and other provision of the Company Act would prevail over the schedule. Next, disclosure requirement of Schedule 3rd are in addition to and not in substitution of disclosure requirement of accounting standard. Disclosure requirements specified in Part 1 form of balance sheet and Part 2 form of statement of profit and loss account of this schedule are in addition to and not in substitution of disclosure requirement specified in the accounting standards prescribed under Company Act 2013. Note to account shall contain information in addition to that presented in financial statement. The note to account shall contain information in addition to that presented in the financial statement and shall provide where required a number 1 narrative description or disaggregation of item recognized in those statement. Second, information about item that do not qualify for recognition in those statements. These items normally include contingent liabilities and commitment which are not shown on the face of the balance sheet. Next, new norms of rounding off. New norms of rounding off shall be introduced depending upon the turnover of the company. Figures for immediately preceding period, except in case of first financial statement laid before the company after its incorporation, the corresponding amount for the immediately preceding reporting period for all items shown in the financial statement, including notes, shall also be given. So these are some of the general instruction for preparation of financial statement. So we all know financial statement is very much important for the organization. Overall financial soundness, financial position of the company can be checked with the help of financial statement. It is a very important document of the organization. Financial statement basically considered three statements. First is trading account, second is profit and loss account, and the last one is balance sheet. It comprises together to form a final account. It is an important financial statement of the company. Other than this, we have cash flow statement, fund flow statement. These are the important statement of the company. Thank you so much.